Brad Williams, XL Prime.
Calculating return on equity. Return on equity is net income divided by shareholder equity. What am I talking about? In as simple as terms as possible, we have an income statement. We've been looking at this repeatedly. Here we see net income right here. Across here, there's 10 years of net income for Microsoft. What is shareholder value or shareholder equity? Define that in a different statement. What, again, is part of the typical financial reporting for companies. You have the income statement, you have a balance sheet, and then you have cash flow statement. Here I attached the balance sheet, and the balance sheet without getting into too much detail because this is not a finance class. We have assets, we have liabilities. Whatever's left over is shareholder equity. Just total assets of 344 billion, total liabilities of 181 billion. You take 344 minus 181, and that's shareholder equity, whatever's left over in the kitty, 162 billion. You go back to the income statement, you take net income, 71 billion, divide that by 162 billion, and that's return on equity. Without using a chart, you can see what's been going on with Microsoft ever since cloud computing and subscription-based payments have been put in place. The average return on equity was right around 32%. Now it's 43%. That is just off the charts. That's unheard of. Again, that's a whole different discussion. Return on equity, net income divided by shareholder equity.
Brad Williams, XL Prime. Thanks for watching.